Hello and welcome to the social trading webinar. If you're watching the recorded version of this, it was held live on Tuesday, the 28th of February at 7:30 in the evening. All of these get recorded, and for people who are here live, they can fire in any questions. So I do this webinar normally a couple of times a month with ayondo. Every Wednesday I do a webinar, Wednesday lunchtime, 12:30 on a Wednesday lunchtime, and that's like the market outlook webinar where we look at what's been happening in markets and what to look out for in the days ahead. But this one is the one on social trading where you can copy other traders. I think it's a really interesting way of trading. I think as we all know, we had that FCA report last year where they reckoned that something like 82% of traders that they'd looked at lost money. The reality of financial trading is it's not easy. Most people lose money. But I think this idea of sort of social copy trading, which I've been using for just under a year now, I think it can be quite complementary with your own trading and a way maybe of smoothing out some of the risk, or if you don't feel you have the time to watch the markets, it's a way of gaining some exposure. And rather than trying to be like the star striker, what you're trying to be with social or copy trading, you're trying to be like the manager, the Claudio Ranieri, and not get sacked, but pick a top team of traders who you follow with real money. So that's what we're going to go through this evening. Really, I've got a few accounts, and that's the one I use for these sort of webinars. It's got about, I think, 400 quid in. So we'll add some traders in, but also I've started blogging about it on a regular basis. If you go to my website, tradeafter.com, that you can see there, I opened another account and I put £2,000 in, and I've done a couple of updates as to how that's going. So after watching the webinar, you can go there. But without further ado, because I think that risk warning has been up long enough, let's go and have a look at some traders. So how it works is there are traders on the ayondo platform who make their track records available to be viewed, and if people want to, they can follow them. And the way it works is, you'll see the mechanics of this in a few minutes, but basically it mimics the trades that they do will get mimicked on your account. So what I'm looking at here, once you log in, I think you can probably see this without logging in, but if you open an account, you can have a demo account and play around with it for 3 weeks and then put real money in. But what I'm looking at here, this is the rankings list. Okay, so if I go over the last 12 months, for example, so I'll do a year's worth of ranking. So all these people who make their accounts available to be viewed are ranked like a league table, and I've sorted it by P&L. I can filter it out a little bit. Let me just click off that a second. So what I'm showing here is everybody. So if you want to, or if a trader wants to, they can trade on a demo account and make their track record available. Now, from my point of view, I'm not really that interested in following people who've got demo accounts, because I tend to think, well, if I'm going to follow you with real money, I hope that you are trading with real money as well. But this is everybody. So we've got 740 traders available who we can follow. The best performer over the last 12 months is this one, Marcus 4334. Is that with a picture? Is that a picture of a goat? I think it's a goat, isn't it? And the P&L over the last 3 months is a stonking 321% return. So clearly that's one figure to look at. If we're figuring out, okay, who are we going to follow, then for me, one condition is that they're profitable. I don't really want to follow any losing traders. I'm completely capable of losing money all on my own, thanks very much. But I want to follow traders who are hopefully consistently profitable. But there is more to it than that. We can't just blindly follow, I'd suggest, people who've made money, because as we know, there's a lot more that goes into the mix. So for me, an equally important number is this one here, maximum drawdown. So what this means is, okay, this person is on a demo account. I'll show you how you differentiate in a second, but they're not trading with real money. So they've made 321% return, but along the way, they gave up nearly 70% of their profits, and you can see it, I think, in the chart here over on the right. You see that big sell-off in the beginning, so ended up giving up 70%, then somehow found their mojo. So this drawdown figure is a really important one. You know, it's all well and good making a chunk of money, but if somewhere along the way I'm at risk of blowing my account up, I'm really not interested. Down here, here's another one with a big drawdown, Caesar. So again, doubled the account over the year, 100%, 103% return, but along the way the account was down 71%. It looks at the moment actually it's going through a big drawdown period at the moment. So so that's sort of a top-down view of everybody. What I want to look at is RMT. So I just want real money traders. So if I click on that, there we go. So now I've got 200 traders. So 200 traders making their track record available, and they're all trading with real money. So at the top over the last year is this one, DAX Finance, 98% return, 22% drawdown, which is, I think, not too bad. I think around about 20% level is a decent, I think, ceiling for me in terms of drawdown. Hectorius, he's an old favourite from some of the webinars that we did in the summer. And then down here, so Scott, look at Scotty77. So the R next to their name means they're real money. The star next to their name means they're popular. They've got lots of followers. But Scotty77, right, 88% return, very good. But along the way, has given back, or did give back, 81% of profits. So for me, that's a level of volatility that I really don't want. And you can see from the chart, it seems to started off quite well, but has, you know, well, no, didn't start off well at all, sorry, gave up loads and has suddenly found their mojo. This is an interesting one. This is one I think I'm following in the account I've been blogging about, I think, Jan A. Great record, 47% P&L. And only 9% drawdown, so a very conservative trader. So that's like a top-down view. So for me, the first two things I'm looking at are here. Then last, when did they last do a trade? Just to make sure they're active. OMP trading has gone a bit off the boil recently. Last traded 6 days ago. It looks like they're taking a bit of a break. Number of trades per month. I'm not too bothered by that. You know, if they're sitting there crunching out regular profits, I'm not really bothered whether they're active or inactive. Followers, again, I'm not too bothered about how popular they are, because it's my money they're going to be using, not everybody else's. And then the last bit, which is another important one for me, what does the trend of the P&L look like? You know, my background is technical analysis and charting, so I want to ideally see a nice smooth trend in there. So it's P&L, drawdown, and what does the trend look like? And if you want, there are other filters that you can build in there as well if you really want to refine it. But for me, this is normally a pretty good place to start from. So let's click on Janhay, this one down here. Okay, so let's click on that one, and we can find out a lot more detail. Now, I think from memory, trading, he or she has been trading since May last year. So there's the P&L. Okay, so if we take it out, let's take it out to a year. There we go. So it seems to have taken the summer off, fair play, and then it came back in September and has carried on. And just, it looks like today the P&L has hit what looks like fresh all-time highs. So just under 48%. Popular trader, not surprisingly, 1,265 followers, which you again with a P&L like that, you'd expect it. Performance since they started their sort of career on here, which was back in May 2016. So actually, no, real money trader since May 2016. Started off, you can see up here, 11th of February 2016. So traded on a demo, what looks like for 3 months, and then started with real money in May 2016. So again, this a half decent track record. I think volatility is pretty low. So again, for me, I want people who aren't too volatile and too exciting, hopefully. Number of trades, 500 odd trades. Winning trades, 98%. This tends to make me a little bit twitchy. If someone's got a really high winning trade percentage, I think, well, do they have a problem with taking losses? Do they just hang in there and wait for the market to come back? So that can be a bit of a worry. Winning months, 92%. Last trade was today, and real money since then. And the maximum drawdown figure is that is quite remarkable, really, to only have given back less than 10% along the way. But you can see the shape of the chart, and I think down here as a comparison, I think that's the DAX, the German index. If you put your money in the DAX, how would you have performed? You'd still have made money, of course, because stock markets have had a great run in recent months, but this trader has outperformed it. Then scrolling down, there's a bit more information, and this for me is another critical one. How has the trader performed month on month, because sometimes you'll see results getting flattered by a particularly good month where they seem to have gone sort of an all or nothing approach to the markets. And this one does have some strikingly good months. Feb last year 10%, March 8%, 7% in April, 8% in Jan, but also crunches out steady profits. And interestingly, the one losing month ended up losing less than 1%. So again, it looks like a trader who's got a pretty good handle on their risk management. So year-to-date performance 44%, and is already up nearly 13% for the year so far. So it's a really interesting trader, I think, this one. Then we have asset allocation. If you want to see what they've traded, this one clearly 84% of trades are on the German index. Does a bit of other stuff as well, but the vast majority of trades are on the German index. How the monthly performance breaks down there, and some other risk metrics down there, and any open positions they've got. So that's it. So we got to this screen from that ranking screen, and if you click on any of those traders, you'll see that sort of detail, so you can get a feel for maybe how they've made their money. So just to summarize, before we add this one in to a portfolio, just to summarize the things I look for: real money traders. So if I'm going to be using my cash, I expect them to be using their cash as well. I think that's too unreasonable. Smooth historical P&L. So again, it's all well and good having made 100% over the last year, but if that 100% was made in 1 month and the rest of the months were just up, down, up, down, up, down, that's not the smoothest of P&L. That's almost like flipping a coin. Then we have the P&L to the drawdown ratio. So again, it's great moving, making 100%, but if along the way they're giving back 80%, it's a bit too much volatility for me. Low volatility coupled in with that, and the detailed search lets you refine all of these. So someone's just asked a question: is career level important? To me, it's not, but I think it's another little tick in the box if you wanted it. So that the career level is the thing here you can see. So you can see Jane has gone all the way along. So that could give you some confidence, because this is a criteria that Ayondo put in, that they have to trade a certain amount and they have to not give back a certain amount, and they can progress month on month or quarter on quarter through the different career levels. So these two here, Edelmetall is an old favorite. It's gone off the boil a bit recently, but you can see they've got their flags, all their flags lit up. So they've progressed really far and seem to be, good experienced traders on the platform. So you could use that as another bit of criteria if you want. Let's take a look at Jane though. So Jane is the one. What we're going to do, we're going to follow this person, him or her. So I've got my account set up. I've got some traders I'm following already, and I'm going to add this one in. At the moment, I've got a portfolio set up, but I'm not actually doing their trade. So let's just step through how all of that works. So I'm going to click on follow, obviously. I want to follow this trader. So in the best spirits of Blue Peter, here's one I prepared earlier. So there's 4 other people that I'm following already, and there's Jane, who I just added. So at the moment I'm not following their trades, but I've got them set up in my portfolio ready to go. It gives me an idealized view here. So the blue dashed line here, if I had followed these people over the last 12 months, how much had I made? I had made, looking at that, just over 70%. Wouldn't that be wonderful to go back in 12 months time, go back 12 months and follow them and make that? Actually, someone's asked a good question. How does the business model work here? The way it works, there's a couple of ways it works. When people are being followed, so if I'm following these people, every time I do a trade, in effect they get a commission, they get part of the spread. There's a bid offer spread, isn't there? So they'll get a little bit of the spread. So for them, it's good to have lots of followers. It's good to be profitable and have lots of followers, because the more people follow you, the more sort of small commission you get per trade, and I'm sure that can mount up, if you've got enough followers. The other way it works, so how it works from our point of view, from me and you following somebody, when we're following them on the Ayondo social platform, we end up paying a slightly wider spread. So if you're trading euro, dollar, or the DAX, and you're following somebody, you'll be paying a slightly wider spread, and it's not that prohibitive, but than you would if you were using Ayondo's self-directed platform. So Ayondo have effectively 2 platforms. They've got this thing called Trade Hub, where you can just trade normally for yourself, buy the DAX, sell the Dow, buy the FTSE, and you pay normal market spreads. And their social trading platform, which we're logged into now, has a slightly wider spread, but it's not ridiculous, and that's to help cover the costs of compensating these traders who you're following. So that's how it works. Okay, we've got our portfolio set up. We've got the idealized P&L, what it would have been if we went back and followed these people over the last year. There's a few other bits of risk management to do. Risk management is really important. And the way it works is, let's click on Jane, who we just added, click on settings. Okay, let's just take a step back from this. Now, if I was only following one trader and I'd chosen 1 times here, what it means is, let's say that trader's got 100,000 account. If that trader risks losing 2% on a trade, so their stop loss is 2% away, means they'd lose 2% of their account, and I'm following them 1 times, and that's the only trader I'm following, then the trade gets done on my account, which might be a couple of £1,000, with a 2% risk on my account. Okay, so that's how it works if I'm following one. If I wanted to, if I was being cautious and hadn't done this before, and there's no reason why you wouldn't do this, I can follow them half the size. So if they do a trade and I'm following just one person, the trade will be done at half the level of risk on my account. If I'm feeling particularly crazy and I'm following one person, I can knock that up to as much as 10 times. So if they risk losing 2% on the trade, it'll be done on my account, but risking 10 times that, 20% of my account. I wouldn't recommend that, but there is a reason why you have this, which I'll come to in a second. So that's if you're following one person. Okay, but I'm following 5 people now. Let me just move that down. Let me just take it out of the way. So I've got 5 people I'm following. So when I'm following 5, there's an automatic level of risk control built in anyway. And maybe the best way is just to read this out here. If you follow several traders, then your risk is distributed evenly amongst all the traders. With 5 traders in your portfolio, you would then follow every trader with 1/5 of their risk. So I've got 5 traders here. So if Jane does a trade where they're risking 1% of their account, it's done on my account, but because I'm following 4 others, it's automatically done at 1/5 of the risk they're doing. Hopefully that makes sense, that the risk automatically gets adjusted. So even if I choose to follow Jane 1 time, at the moment, because there's 4 other people I'm following, my effective risk factor is 1/5 of that. So if I want to actually mimic Jane's risk, that's where I need to bump it up. So I might, if I bump it up to here 5 times, because I've got 5 other traders in my account, I'm now matching Jane's level of risk. So if Jane risks 1%, I'll risk 1% as well. Yeah, so obviously that is 1/5 of potential profits. The question just came in there. If I'm trading 1/5 of the size they are, if they've made 10% in the last year and they made 10% this year, if I'm trading 1/5 of the size, that's going to be a 2% profit for me. So you can set this to whatever you want it. So let's say with Jane, we think, okay, it seems to have a sensible approach to risk, good track record. I want to mimic the same level of risk that person's doing. I'm going to knock him up to 5. So my effective risk factor is now 1. Confirm settings, done. And I can do that for all of these people, so I can say on this one here, let's say I'm a bit cautious about DAX Finance, I can dial the risk right down. If I've got a bit of faith in Edelmetall, I might make that one 5 times. PsychonNet's an interesting one actually, because that is a demo account. So I can make that a smaller level of risk. So hopefully that all makes sense. You can play around with the risk levels that you're happy to take on, and clearly, you can adjust that. It's easy to log on and adjust it. You've got these individual settings for each trader. And there's another level of risk control, which I'll come to in a second. But now we're ready to go. So I've bumped it up, and clearly that's affected my performance. I would have made over the last year, what's that, just over 100% up there? Yeah, something like that. About 130% is now what I made over the last year, following them with those levels of risk. And that's it, I'm ready to go. So if I click on execute on live accounts, no prizes for guessing what that's going to do. I think we get another warning screen. So because these people already have trades open, what it says is, well, do you want to open the same trades they've currently got open? And I always say I never choose this option, because Jane, for example, has got 17 open trades. Now, Jane might have bought the DAX yesterday and it's still got that position open, but bought it 30 points lower than what it is now. Well, my trade won't be done at yesterday's price, unfortunately. It'll be done wherever the market is now. So the trades, if you choose to open up the same trades, they'll be executed at the current market price. I've got no interest in doing that, but I want to follow any future trades that these people do. Execute portfolio. There we go. So that's it. We'll have another screen that comes up now. So I've got 431 quid in my account. I've got no unrealized P&L, of course, because I've just started following these people. Recently closed positions, I think that's from when I last did a webinar, but you'd see any open positions here. So until someone trades, there'll be no open positions. And this is the screen I come to. I come to it. So I've got a couple of other accounts. I don't check this one because it's just for these webinars. But this is the screen I come to. So it's simple browser based, just to see, okay, how's the P&L doing? Has any trade gone crazy? And I might check it maybe once every couple of days. It's really strange in the beginning. If you've traded for a while or you've never traded before, it's really weird in the beginning to have an account where there are trades going through with you doing nothing about them. So it's quite a change in culture for me. But you can see the size of trades then on this 400 quid account. They're tiny trades. I closed a bunch of them before the other webinar, and we're talking, £1.80 loss, 3p loss, 6p profit. They're pretty small trades because of the risk parameters I've put in. There's one last sort of thing we can do here to manage the risk, to completely put our minds at rest. So my account balance is 431 quid. I can set what is in effect a stop loss on my account. So I can say, well, okay, I'm happy to follow these traders, but if my account balance falls to X, let's say £225, for example, close everything. Close all the trades and stop doing any new trades. Click on save, and that's it. It's done. So so that I've set like an ultimate financial stop loss on my account. And I think that's it. So now all we've got to do is wait. Well, we're not going to sit here and wait for someone to do a trade. But now the account is set up. If I change my mind, I think actually I've got cold feet. I want to just go through the rankings again. If I click on stop execution now, then clearly it will stop doing any future trades. And then it's very easy once I'm on this page to go back to my portfolio builder, to see the people I'm following, to check them a bit more. Go back to my watch list. I don't think I've put anybody on my watch list. So there we go. We can see what they've been up to. So there's Psycon there. That's let's see how this person's doing, because they have been doing reasonably well. Looks like they're taking a bit of a hit. Well, let's have a search actually and see. Let's go back to our rankings list, Psycon Net, and search for that one, because they seem to have a really good approach last year, but I wonder if they got clobbered after the election. Let's have a look. They're still up. So there's the headline figures for Psycon there. Running on a demo account, but seems an active trader, which is a strange one, and gone right through the career levels as well, but still not doing it with real money for some reason. P&L, 48% over the last year. Maximum drawdown, 22%. So not too bad. You can see the chart. It's very pretty up until recently. We saw some good strength in that chart. Let's see how the last 3 months have been, because I think maybe it's the last 3 months where this person has suffered. So there we go. So there's the P&L. Been active since 10th of July 2015. It's a really long track record. Fantastic trend. It just before the election was up about 82%. Very small drawdowns along the way. But it looks like the last 3 months, there we go, taking a bit of a hit over the last 3 months, down about 15%, is that? Yeah, down 15%. So it's very easy, if you've got your watch lists or your portfolios built up, to keep an eye on how people are doing, and has someone started going somewhat off the ball. And if I go to my account, I'll see if anyone's done a trade yet. So that's it. That is really the idea of social trading. No one's done anything yet. There's a few companies who do it. I don't think it's that big in the UK, because I think that the two main companies in the UK who I used to work for in my previous life, they don't do social trading. So I think it's one of these things that's never been pushed that much. But I think it's a really interesting sort of add-on to your own trading if you're doing it already, or a way to try and smooth out, I think, the typical volatility that plenty of people see in their own trading. And the ayondo platform, because it's all browser-based, it's really easy to use and start playing around with, and maybe play around on a demo to get a feel for it. Someone saying, what happens if you remove a trader from your portfolio and the trader has open positions? I believe those trades will be closed. So if they've got any open positions, those trades will be closed out. But drop me an email if I'm not. They haven't done any trades yet, have they? So I can't remove anybody. I was going to try and remove somebody. Let's see what happens. It's a good question. Let's go to the portfolio and take somebody out of it. Who should we take? Let's take DAX Finance out. Remove. Are you sure to remove all open? There we go. There's our answer. All open positions will be closed. There we go. Nice and easy. So that's that. So just to flip back and just to remind ourselves of the filters, the stuff I look for. I want to see a smooth P&L. They've got to be profitable, clearly. For me, I only look at real money traders. I don't want to see massive levels of drawdown along the way. I really do not want massive volatility. If they can sit there and make a 10% profit over the year, that's fantastic, particularly in a low interest rate environment we're in at the moment. Clearly with trading there are no guarantees, but I want to try and have a smooth P&L, low volatility. And if you want to dig down even deeper, you only want people who trade certain asset classes, you can do that. But for me, I'm quite happy to take sort of a high level longer term approach, and I might review it. I won't chop and change traders every week, because we're looking at longer term track records here. So for me, I'll normally give them 1 to 3 months to prove themselves, then sit down and review it and see if anyone needs chopping out, or if there's maybe a new star coming up. There's one, let me have a quick look. I was writing about one today who seems to, I think he's quite a new entrant, but has seemed to have done really well the last few months, because like I say, in recent months it's been a bit of a tough time. Where is it? Was it someone called Joe Investor? Let me see if I can find them. Joe Investor. Here we go. So this one hasn't come up on our searches tonight because the P&L is relatively, and they've taken maybe they're taking a bit of a hit. But here we go, Joe Investor. Let's click on that one and take a look. I think maybe they've taken a bit of a hit in recent days. Let's have a look. But trades a mix of different equities, so it has an algorithm. So it's only been trading. We've only got a track record going back to November, up about 10% since then. But I like the winning trades, 65%. 2/3 of trades being winners, I think, is a much more sensible ratio than 90% of your trades being winners. And the drawdown is tiny, a drawdown of only 7%. So that's one I'm sort of keeping an eye on. Talks a bit about the strategy, has an algorithm that tries to find stocks, global stocks that are going to move. And there's trades a real mix, bit of everything. Most people tend to stick to the DAX, the Dow, or FX markets, but this one does trade a little bit of everything. So Joe Investor is an interesting one who's come up in recent days. We'll see how they perform. But that's it really. We're done. It's as straightforward as that. It's as straightforward in terms of trying to find people and follow them, and then seeing how they perform. But like I say, I've started blogging about a live account. If you go to my website, tradeafter.com, there's a bit on there, and there's links to sort of various pages on ayondo to read about stuff. If you have any questions, drop me an email. My email address is david@tradeafter.com, and I'm on Twitter. If you're on Twitter, you can follow me at Jones the Markets. So I normally sort of try and tweet interesting charts and stuff like that. So tomorrow we're doing the social trading webinar, not the social trading webinar, the market outlook webinar at 12:30, where we take a look at what's driving markets. But it could be interesting if you're up at midnight tonight. Have a look at what the markets are doing when Mr. Trump starts to speak. I think he's speaking to Congress, isn't it? So it's been a much awaited speech, this one. So we'll see sort of excitement that means for tomorrow. But for tonight's webinar, we'll wrap things up. Thanks for coming along. We'll do this one again in a couple of weeks' time. But like I said, I'm a big fan of social trading, and I think you can dip your toe in. You can see how you can set the right levels of risk for you and see if it works. Okay, enjoy the rest of your evening. Thanks very much.